Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today that's not actually really all that great, considering the markets are way down today. One of the biggest dips I've seen in quite a while, probably since, the December 18th dip or the Chinese FUD dip back in September. So before I get into it, I just want to talk about the fact that I'm right back where I started in terms of recording. So I had moved my whole unit here all into my back room in order to use my green screen, and unfortunately, the lighting back there is pretty horrible. Now, mind you, I could easily buy some umbrella lighting or some LED lights. I've got some good suggestions from you guys. But more importantly, it was a little depressing back there. It was very tight. Again, the lighting was very inorganic and just sort of, just regular bulb lighting. And you know what? I didn't really like it all that much. So I said, screw that. I'm going to move back on out to where I'm a little bit more comfortable, where I get more light and I can be out in the open a little bit more. Just like it a lot better. But on to the main story. All of the top 100 cryptocurrencies see red amidst the CFTC price manipulation probe. So let me show you what price manipulation looks like. Veritasium. Oh my, what even is this? This is not organic. It went from $78. Well, actually, you could pull it back just a little bit. From $63, and we got to a high of $104 within just a few hours, and you see this right here. This is manipulation. This was causing everybody to buy into Veritasium, and then the people who manipulated it went ahead and dumped it and left everybody out in the cold. So those who bought it at $100+ are out of money. So that is price manipulation, and that's why the SEC and various organizations are looking into price manipulation of cryptocurrency, because a lot of people are losing money on it. I've never bought Veritasium, and the only reason why I saw this was because we are now under 300 billion market cap. We were just at 290 billion, and after the refresh here, we're at 291, and it fluctuates. I might be able to refresh it at the end of this video and be back right down to 290. So looking at the list here, from this article, it says all of the top 100 currencies are in the red, and that was true, except for Veritasium, and that happened just a few hours ago. So just a few hours ago, literally all the top 100 coins, every single one of them, including Tether, which is never supposed to change, is in the red. So as we can see, a massive drop in all the prices, including EOS, which was supposed to go way up, but I'm glad I sold near the 15 mark, because I didn't think it was going to go much further. Turns out I was personally right on that. I didn't call it live, but I did make the trade. I didn't sell it at the very top high, so I regret not selling it at the top high, but nobody can ever call when it's going to be at its highest. And now it's down by 25%, and everything is just a sea of red. So Sunday, June 10th, crypto markets have seen a sharp drop today in the wake of the news that the U.S. Commodity Futures Trading Commission has launched a probe into 4 major crypto exchanges. So there are many other crypto exchanges that are likely being manipulated in terms of various coin prices, but I suppose you got to start somewhere. All the top 100 cryptocurrencies by market capitalization are in the red over the 24 hours to press time, while total market capitalization is down by about 20 billion, but in the same period as of writing this article, which by the time this article was written and by the time I make this video, it's probably more like 30 or 40 billion down. So Bitcoin has lost just shy of 5% of its value in 24 hours. Let's see, Ethereum is down by 6%. Total market capitalization is at 320 billion at press time. Exactly. So now we're down to 290. So it's not down by 20 billion, or what did it say at the beginning there? 20 billion. So now it's more like 50 billion down in less than 24 hours. So among the top 10 cryptocurrencies, IOTA and EOS, have suffered the largest losses over the past 24 hours. So Miota is down by 10% at $1.50. EOS, which saw significant growth earlier this month, coinciding with the release of its mainnet, has not been spared today either, losing 8% over the 24-hour period. And again, those numbers are a little off because that article was written, because it's crypto, so that article is ancient because it's like 5 hours old. And so instead of just 5% loss, no, call it 25% loss. It did say 8%, but no, now we're down to 25 about. So the sharp decline in cryptocurrency prices takes place in the wake of the news that the U.S. Commodity Futures Trading Commission has requested trading data from crypto exchanges, Bitstamp, Coinbase, Itbit, and Kraken. These are respectively the 21st, 14th, 45th, and 13th largest exchanges in the world by trading volume. So again, it's not even really scratching the surface on the largest trading volume exchanges. So some of the largest trading exchanges is Bitfinex and Binance, and so on, depending on what coin you look at. But usually Bitcoin is the best one to look at in that term. So following the launch of Bitcoin futures trading by the CME Group in December 2017, the four exchanges subpoenaed by the SFTC have been providing price data for the CME Group. The CFTC's request is a part of an investigation of whether there is any activity taking place on these platforms that might constitute crypto price manipulation. Oh, geez, I wonder if that's true or not. Wow. Let's take a look at our favorite coin and see if there's price manipulation. Oh, geez, there is price manipulation. Wow, wow, wow. It's a matter of finding out who it is or what it is that is doing it, not necessarily if there is. This is not organic. That's not real. That doesn't actually happen. You don't go up from $78 with a coin that has only a 2 million circulating supply currently, which is not a lot, but that doesn't happen. It doesn't work like that. It's not like Veritasium is so good that everybody was just had to buy it today of all days. That's called price manipulation in the face, plain and simple. So the day that the CME Group launched its futures, and now I've shown this numerous times on my channel, so those of you who have seen it several times, I apologize, but let's just show it one more time. What happens when you release futures? So let's just bring it back a little bit here. Futures was launched December 18th, and trading on futures began on the 18th. And oh my God, here we go, all the way down, and has never recovered since. So, I wonder, if you're incentivized by futures to make sure, because if you make a bet saying, I think it's go to 6,000, and maybe you have a little bit of power to manipulate the market, that might happen, right? If you're incentivized to crash the market in order to pick up futures at an incredible price and bet on the downfall of Bitcoin, it's kind of like betting on a horse race, and there are 5 horses in the race, and you are a stable boy of all of those 5 horses. Boom, 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 and you make a bet that this horse right here, this little stubby horse right here is going to win. And you're the stable boy, and nobody would know if you poisoned the other 4 horses, so when they get onto the track, they are puking and can barely run. Gee, I wonder who's going to win that one. Bloomberg reported today that a South Korean crypto exchange, CoinRail, is reviewing its systems after suspecting hacking attempt. CoinRail has reportedly claimed that it managed to freeze the affected coins. However, this event is unlikely to have significantly impacted the price action of the markets, with coin market cap data showing that CoinRail is the 99th largest crypto exchange with a trading volume of just 2.5 million. So entrepreneur and Bitcoin evangelist Alistair Milne tweeted a poll today asking his followers what the reason for the crypto market's sharp drop. Milne's seeming implication that the fall is not related to either the CFTC's data request or the CoinRail hack was met by approval. It's aliens. Of course it's aliens. Why they even put that in a somewhat realistic article talking about a real thing of Bitcoin and crypto in general being manipulated, and easily one of the worst days that crypto has seen since the major crash after the futures launch, I don't know. But kind of funny, but still, it's a serious article, so why? So moving on to some less fuddy news. So breaking down the blockchain scalability trilemma. So I've talked about this a few times on my channel, but this puts it into a little bit of perspective. Scalability, decentralization, and security. So when the average transaction fee for Bitcoin steadily rose, questions were raised concerning Bitcoin's ability to scale. Similarly, Ethereum's scalability issues were made very clear when the viral success of CryptoKitties slowed down the entire Ethereum network. Scalability in the context of blockchain and architecture can be looked at alongside ideas of decentralization and security to form what Vitalik Buterin described as the scalability trilemma. So, Vitalik Buterin is a really clever cat, and, I like the things that he talks about. And he talked about this when he was talking about Ethereum 2.0, and that's kind of like why we're moving to Ethereum 2.0 with the proof of stake method. So the scalability trilemma indicates the blockchain systems can only possess two of the following properties of scalability, decentralization, and security. As a core tenet upon which the majority of the community is built, decentralization enables censorship resistance and permits anyone to partake in a decentralized ecosystem without prejudice. Concerns the ability to process transactions on any given network. If public transactions are to be usable by the masses, then they must be able to handle a scenario in which there are millions of users on the network, which pertains. So I think there's some missing information here. It pertains to the immutability of the ledger and its general resistance to attacks such as 51% attacks, so security, Sybil attacks, and DDoS attacks. So currently, blockchains such as Bitcoin and Ethereum were designed with a focus on decentralization and security. However, this has come to the expense of scalability, as both blockchains have incredibly slow transaction processing times. The reason for this is that all full nodes on these respective blockchains must reach consensus before transactions can be processed. So if I send you a Bitcoin, it's got to be processed on every single node on the planet. That's really slow. That's super inefficient. However, you get great security. You get great decentralization from that. So Ethereum can process around 15 transactions per second, where Bitcoin can only process about 7. But both these numbers are dwarfed by payment system Visa, which can handle up to 24,000 per second. Even proposals made to tackle blockchain scalability, again, fall prey to the issues raised by the scalability trilemma. So even Visa, with 24,000 transactions per second, have you ever tried to buy things around Black Friday or Christmas, and you're standing in line, even at the gas station, and you're standing in line, and the cashier says, "Oh, I'm sorry for the wait. The system is being very slow today." Well, that's because Visa is overburdened with transactions. Even though they can handle 24,000 per second, Black Friday, Christmas, various holidays produce tons of transactions, including various summer holidays. It doesn't matter. Whenever there's a major holiday and a major buying event, the transactions go through the roof, and it slows down a little bit. Although 24,000 a second catches up very, very quickly, you do have to stand there sometimes for 30 seconds while you're waiting for your card reader to read the chip, or when you swipe it or whatever. And you sit there for 30 seconds. That's because Visa's behind. So imagine if everybody used Bitcoin and you swiped your card on Black Friday or Christmas, or before Christmas, or whenever. You guys get the point. You'd be standing there for a good while. Have you ever tried to send Bitcoin around and you wait for that transaction, you send it to another exchange, or you send it to this, that, or the other thing, and you wait like an hour and you keep reloading the exchange and you're like, "Where's my Bitcoin? Where's my Bitcoin?" And then an hour later it shows up, 7 transactions per second. So the solution posits that an increase in block size will increase scalability. The reason is that by increasing the block size, more transactions can fit into a single block, and thus a larger batch of transactions can be processed, therefore increasing the number of transactions that can be processed per second. However, the limitation of this solution is that ultimately results in the centralization of nodes on the network. Bcash. Increasing the block size would require nodes to possess better computing capabilities in order to process transactions. This may ultimately lead to a scenario in which a network is effectively maintained by a handful of supercomputers that have the processing power required to handle an increase in transactions per block. Bcash. 32 megabyte blocks. It's a problem solver, right? 32 megabyte blocks. Let's go solve everything. It's fine. It's fine. They got it covered. It's not a scam or anything. It's not an exploit. Another solution is to completely abandon the idea that there can only exist one blockchain upon which all transactions must occur. Instead, this solution accepts as a possibility that there will be numerous cryptocurrencies all possessing their own blockchain, so that they can just as easily allow for transactions to take place. Reduced user activity on varying blockchains should allow for a more scalable ecosystem. However, with fewer nodes operating on any given blockchain due to a wider distribution, this may result in blockchains actually becoming more insecure, as they would be more susceptible to attacks from bad actors. Vergecoin. Despite the roadblocks that achieving scalability brings, the flow of potential solutions shows no signs of abating. For example, the Ethereum project is looking towards second-layer scaling solutions, such as sharding Plasma, as possible fixes. Successfully implementing one of these scaling proposals would allow the Ethereum virtual machine and other technologies comprising Ethereum to function more efficiently. And of course, Bitcoin's Lightning Network is another highly anticipated scaling solution that promises to improve the transactional ability of the Bitcoin network, which already exists, but Lightning Network is very hard to set up for most node runners, so it hasn't been completely implemented yet. So the yes votes are in on the EOS blockchain to launch imminently. The launch of the EOS blockchain has been a giant experiment in remote self-organization. Tonight it took a big leap forward as anticipated candidates for the role of validators or block producers located all over the world voted go to take the mainnet live. So EOS is a distributed proof of stake, a blockchain created by Block One, whose co-founder Dan Larimer has pioneered similar systems with BitShares and Steem. The company raised $4 billion to develop the open source software over a year-long initial coin offering. The problem with EOS is it's literally one of the most decentralized cryptos out there. So if you don't like decentralized crypto, I don't know why everybody is on the EOS train. I really don't mean to FUD EOS. They're doing it to themselves. So I don't even have to really nitpick at EOS. So there's going to be 21 node operators with 100 standby candidates. And those 21 node operators will receive approximately $2.5 million a year just for being a node operator. So the lucky 21 will be millionaires just for running a node. And they can do anything they want with that node. They could be shady with it. They could be mafia-esque with it. It's not good at all. And all of the fees that EOS has, you won't pay, not us, the usual people. Really, the fees go to those node runners. So that's where they make their millions of dollars per year. And it's absolutely disgusting the way that EOS operates. It's really a big cash grab. They made $4 billion to make a centralized crypto that's going to make 21 lucky people that you probably will never know millions of dollars. Congratulations, planet Earth. EOS makes me more and more sick every single day that I look at it. So no one really knew what would happen when the company turned its code over to the world, but with the vote, it's coming more clear. As the software approached release, a group of organizations vying to serve as block producers found each other and formed the EOS mainnet launch group. And they have so far managed to agree on a number of things because millions of dollars, of course they're going to agree. Most importantly, that they would launch one mainnet for EOS. Well over 100 candidates, organizations participated in a call that started gathering at 1, so not you, Saturday, and the vote occurred roughly 45 minutes later as 1,800 people watched. The vote to go no-go was unanimous, or very nearly so. The moderators did not report out a final count. The meeting was streamed on YouTube. With this vote, a set of appointed block producers will move to take the network live, and they'll also be driving around their Lambos, doing circles around you, vroom, 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 while you're spending EOS, and it's just piling up. It's just like in the top of the Lambo, there's just this little money thing, and it's just spraying them with dollar bills as they're doing circles around your car in their Lambo. According to the EOS mainnet launch order of events, initiation of the network by appointed block producers will be followed by at least 48 hours of initial testing, barring additional major bugs. EOS holders will then be invited to vote for a set of block producers. EOS goes live once 15% of tokens outstanding have been staked to votes, and the first set of elected block producers have been established. Well, 90% of EOS tokens are held by like 10% of wallets, so congratulations, you have no chance. As we previously reported, there's still a lot of issues to watch once that happens. So many of these block producer candidates have put in a lot of time, money, and work up until now. Will the ones who don't secure a coveted validator spot honor their promises, or will they move to launch a rival version of EOS? So now there's just going to be rival versions of EOS. People are going to be making millions. All the fees are going to them for why? I don't know. Just because somebody made it up. So this is more of the four exchanges must turn over comprehensive information in manipulation investigation. So it talks about Bitstamp, Coinbase, Kraken, and such. But we won't talk about that because I essentially brought up the same article. This had a little bit of different things in it. So I will link this in the description below if you would like to read it. And then the final article today was just kind of a little silly. ICOs have become a parody of themselves. So Watchdog ICOs exit scamming ERC20 token wallets getting emptied via smart contract bugs, people dying in token sale publicity stunts. Oh, because it's a smart contract, you can't lose your money like P3D. It only took 3 tries. Everybody lost their money once. Everybody lost their money twice. And why not give it a 3rd try? Oh, what about proof of Trevon James? What a great way to make money. If you're not the first person in it, you won't make any money, but maybe you will be. So might as well scratch off that lottery ticket. So the world of ICOs has become so bizarre, it's impossible to tell what's real and what's satire. As a glimpse into the events of the past week's show, there's never a dull day in the ICO land, nor is there a sane one. So the ICO is dead. Long live the ICO. It's easy to take potshots at ICO. The same thing happens to every shiny thing once it loses its luster, from new metal to flared trousers, and from Twinkies to mini discs. Everything was cool at one time until it wasn't. It's open season on ICOs right now, and the current crop of crowd sales are making it very easy for the haters to hate. As Wikipedia explains, Poe's law is an adage of internet culture, stating that without a clear indicator of the author's intent, it is impossible to create a parody of extreme views so obviously exaggerated that it cannot be mistaken by some readers for a sincere expression of the parodied views. An examination of the past week's ICO news, or those of any preceding week for that matter, shows how hard it is now to determine what's real ICO news, what's fake news, and what's satire. And this is exactly why I ignore virtually every single ICO offer that shows up in my email. You can't tell what's fake. You can't tell what's real. You can't tell what's a scam. You can't tell what's satire. You just can't. They all sound exactly the same. We're creating a new infrastructure for the blah, 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 and they throw in all these corporate words. I'm not saying I don't have a good enough vocabulary to read that, but it means nothing in the end. It's like Tron saying we want a decentralized internet. It doesn't mean anything. It means nothing. Tell me actually what you mean. And that's what ICO after ICO after ICO and white paper after white paper says. It's just garbage, jargon, nothing. So Monday, it emerges that a hacker has deposited an unfeasibly large amount of HADE tokens into Fork Delta and IDEX before withdrawing 26.5 Ethereum. They did so by exploiting a vulnerability in the HADE tokens transfer code. Block broker an ICO setup to unearth ICO exit scams. It's unclear whether that was always the joke, or if the cruel irony was unanticipated by the project's backers. Meanwhile, the SEC's Jay Clayton speaks of ICOs taking bags of cash to the U.S. border. Wednesday, it's reported that one of the token distributors for the Chopin ICO has had its crypto wallet hacked and 10 million stolen. Elsewhere, an ICO Telegram channel is caught selling pooled tokens for projects that it doesn't even have an allocation for. Thursday, an ICO emails news at Bitcoin.com trying to drum up publicity over Apple stealing its logo. Apple totally didn't the same day, The same day, a travel writer known as Nomadic Matt launches the world's first book ICO. You fund it, he'll write it. So that's Apple and Swift, whatever. Friday Phantom, one of June's most popular ICOs, has its Telegram channel stolen by a hacker. Admins eventually managed to regain control of it. Meanwhile, a 2-day ICO competition, a crowd sale equivalent of a battle for the bands competition, concludes with Pigsby taking gold. For their winning pitch, the team received $600,000 pre-sale investment and a listing on a top 3 exchange. Saturday, all eyes are on EOS's 2017 most hyped ICO as it prepares its mainnet launch. There's just one problem. Okay, a few problems. The identity of the block producer overseeing the voting process is being kept secret, which goes against the entire principle of the blockchain transparency. Oh, EOS. Oh, and there's a shortage of tokens required for staking, forcing the project to print another 19,000 to push things through, because there's not a shortage of tokens. No, there's not. 90% of the wallets hold, or excuse me, 10% of the whole wallets hold 90% of the tokens. So nobody's giving up their tokens to stake because they're all holding them, because it's a feudal kingdom with indentured servants, literally. That's what Weiss Ratings calls it. So the week ends as it began, with Sunday, with more suspicious deposits made on IDEX. On this occasion, South Korea's CoinRail exchange is hacked, and 2.6 billion NXPS tokens from the Pundi X ICO are stolen. That's 3% of the total supply. So what about all the good things? So this is Ponzi ICO white paper. It contents with just as a joke. I barely know Solidity, but let's just build a Ponzi ICO. A dedicated section on what I do with all my ether that I receive. Easy as it is to ridicule ICOs, the vast majority are not scams, and a fair number of these projects add value to the crypto community, which is true. It's just unfortunate that the misbehavior and mishaps of the more egregious projects outweigh the good work done by the few. If only all crowd sales were as honest as Ponzi ICO, which makes no secret of its desire to scam investors from the outset. That ICO is a parody. With the rest, it's often hard to tell. With Ponzi ICO, let's click on this, see what we can get. I wonder if it's actually, it should be real. No, yeah, it's definitely real with an address there. Yeah, I've seen these, these Ponzi ICOs or these fake ICOs, and they actually raise money. These people make a lot of money, and people give it money. Even though literally on the front of the website, they say, this is a scam. We will just take your Ethereum and buy a Lambo with it. And people still just dump in tens and tens or hundreds of thousands of dollars worth of crypto. Why? I don't know, because people just hope that they're going to make a lot of money, even though because they just don't read. So again, market cap up to $294 billion. So we actually gained a few billion just by having this conversation. So will it return? Will it go down further? At this point, nobody knows. It's all over the place. But I hope you guys enjoyed this episode, and as usual, I will see you guys next time.